Hello and welcome. Today we're working on what is an income statement. Let me show you what an income statement is with a simple little example, and that way you start to understand what it means when you see an income statement, how to prepare it if you need to do that. And so let's get started. An income statement just simply is revenues minus expenses. If the revenues are larger, then you have net income, and the expenses are larger, you have a net loss. So it shows how well you did last period. Could be for a month, could be for a year. So let's say we have Travis t-shirts, and Travis is selling t-shirts, sold 100 shirts. And so let's say it's for the month of December. So we would always have the name of the company, Travis T-shirts, income statement, and then for the month ending, let's say 12/31, so December 31st. And we have a little bit of information, so let's just show how this works and understand it step by step. Travis sold 100 t-shirts for $20 each, right? $20 each. So our sales, or our revenue, is going to be 100 t-shirts times $20. So we have sales of $2,000, our revenue of $2,000. All right, I'm going to make these all dollars so I can go down this column. So we have sales of $2,000. Now, we have some costs associated with those sales. And so the first cost is each of those t-shirts cost us $6 to buy and maybe put design on or whatever. And so there are cost of sales, or cost of goods sold, sometimes you might see it. Cost of revenue would be 100 shirts times $6 each. That's a total of $600. So what kind of gross profit did we make? Well, the gross profit just simply says, well, your sales minus your cost of sales, and we made $1,400. And because we subtracted, we're going to do a underline here so we can see, oh, we subtracted those two numbers, and that is a subtotal. 2,000 minus 600, that's the answer. Now we have some other costs, operating costs and all these other ones. We'll do one more subtotal before we get to the final net income. Let's say our operating cost, the only thing we had, we spent $150 in advertising. So $1,400 minus $150, we're going to end up with, I think, $1,250 is our earnings before income tax. Sometimes you might call this pre-tax profit. Sometimes they abbreviate this EBIT for earnings before income tax. So you might see it just as an acronym, EBIT, if you're doing some calculations on that. You may not write all that out. On a formal income statement, you would see that. Now next, our income tax is going to be 20% of this earnings before income tax. So I'm going to take the $1,250 times 0.2. So we expect to pay $250 in income tax. Our other, there's no other expense or no other income. And our interest expense, let's say we borrowed some money and we pay $20 of interest. And so we have several different costs we need to subtract from our earnings before income tax. So $1,250 minus $250 minus the zero's not going to matter here on this one, minus the 20. So how well did you do? Well, we made $980 of profit. All that work, we collected $2,000. We spent all this other money. In fact, we started with $600 of t-shirts first, and we sold, and we paid all these costs off, and our net income is $980. So we made $980 in net income or net profit, or just simply profit. This is how you look at an income statement. Hey, see you on the next video.